Hey everyone, Logan here from the Profitable Rental Podcast by Landlord Studio. And just want to kind of talk a little bit today about managing rental property finances. So this can become quickly pretty overwhelming in the rental property business. And things can only get worse when it comes to tax time as well. So you might have a handle on finances, but essentially you'll need to get a very good handle on finances to optimize cash flow for profit first, or being profitable in your rental property business, and also optimizing that for end of year tax deductions, etc. In this episode of the Profitable Rental Podcast, we will be exploring rental accounting practices, the role of financial reporting on an ongoing basis, and how you do that as you go through your business on a month to month sort of basis, and everything you kind of need to know when you are preparing for tax time. And to help with this, we have Christanne Wright with us, an expert business and financial advisor with over 25 years of experience offering tax and accounting advice to help clients better manage the wealth. Christanne is the founder of Your Right Resource LLC, a certified accountant practice, and has worked with multiple, I'm sure, hundreds of entrepreneurs, small business owners, and of course, real estate investors. Welcome, Christanne. Great to have you with us today.
Thanks, Logan. Nice to be with you all.
I want to start by asking your favorite quote and why. And you mentioned this a bit offline before the podcast, but I'd love for you to go into that and let us know what that is.
So my most favorite quote, it comes from Maya Angelou. And she, basically helped us to see people will forget what you said, they will forget what you did, but people will never forget how you made them feel. And I find that is something I want to keep in mind with all of my interactions, whether it's networking or with clients and prospects and all of the different people that we interact with.
Super important in the service world and the business world as well. Business may seem all numbers, but there is a lot of emotion to it as well. And if you can service your clients well, then you have a lasting impact. So really like that. Wanted to dive into financial reporting. Can be a subject that people tend to avoid, but would love to dive into that first and get your perspective on, I guess, the importance of what role that financial reporting really plays into when it comes to creating a profitable rental property portfolio.
So financial reporting to me is one of the keys to really understanding whether or not your business is doing what you want it to do. So if you have a rental property that is generating, let's say $15,000 for the year, and your expenses are a certain dollar amount, let's just say $5,000, then you can look at those numbers on a financial income or profit and loss statement and say, oh, okay, it's costing me this much for maintenance, it's costing me this much for real estate taxes, it's costing me this much for the mortgage, it's costing me this much. So you can outline and see, okay, my return on this investment is X, Y, or Z. And if you see that number is not improving, then there's something wrong. You have to figure out what that is. And typically you're going to know. I mean, you might know that you had some type of a disaster, a fire, a flood, broken pipes, something along those lines that caused, this situation. However, it could also be something that just was not built in to your numbers or figures at the time you actually purchased a property and started renting it out.
Is there a kind of key target of return on investment that you would advise to your clients to aim for in your kind of methodology, I guess?
It would truly depend on the type of investment. So I would say if you're doing a fix and flip, that might be a different story than a rental property. But, I would want the client to at least see a 20% margin on that property. Sometimes it can be higher just because of you don't have a mortgage. So now you don't have to have that expense. And of course, you're dealing with maybe some fluctuating taxes, but you're able to maintain that because you're able to keep up with the rental marketplace. What should we price this particular property at? Other times I find that there's an issue because you've come in and there's been very low rents, and now you're trying to get to that market rate, and sometimes that can be difficult.
And to kind of aim for that return on investment, what are the sort of key financial reports that you're encouraging clients to be running, frequently to make sure that they're actually operating efficiently and more profitable?
Like I said, that first financial, you really definitely want to see what's on your P&L. Definitely want to see that every single month. Sometimes you might look at a deeper dive into that profit and loss, really seeing every single line item, what's going on there, depending on how many properties you have. There are certain reports that you can generate on how quickly are you getting paid, or is it taking your tenants long time for you to get paid? Do you have anybody that's 2-3 months late, overdue, that you just haven't really followed through with? So you want to be able to pull those types of reports that give you the data that is going to help you with your decision making. Is it time to evict and follow through with that eviction process? Is it time for you to, we didn't assess the late fees, time to assess the late fees? Is it time for you to go ahead and, make a big adjustment? If there is an issue with tenants not paying you, what is the underlying reason? Did they lose a job? Or is it just that some other thing that they're just being irresponsible? So, a lot of those types of things. And then how quickly can we turn that around based upon the information that you've been able to pull from your system? And that's one of the reasons that I really enjoy using Landlord Studio with clients. They can pull very, very good, comprehensive drill into their business and be able to find out the information they need to make good decisions.
Have you got any exciting stories from clients about, I guess, tenant cases where they haven't paid or there's been overdue rent or anything like that? I'd love to know.
Actually, I have one client that is absolutely just annoyed with a client, with a former tenant, I should say right now. However, I believe in my, outside looking in, I think it's on both sides that there was this misunderstanding of what was going to happen. But what I find interesting is, landlords always have an issue with something a tenant does. Generally. So in this case, though, there were so many things, it was kind of crazy. Can't get in the property. That's a big thing. Okay. I'm sorry. Yeah, if I own the place, I need to get in the property. Oh, wait, your dog's pooping everywhere and you won't pick any of it up off of the ground. And then when we alert you, you make it worse. You're like, let's make piles. Let's not even, we're just going to mess. And by the way, now that I'm mad at you because I'm making piles with the dog, I'm not going to pay you because, now I'm just ticked off because you were talking about my dog leaving messes. Things that just don't make a whole lot of sense, but people are people, and we can, almost like trigger, something negative in a tenant. One story, I was absolutely shocked, but there was a tenant that it was boyfriend, girlfriend, and the girlfriend's teenage son. Like, he's in high school, and for whatever the reason, the gentleman had an issue. I don't know what. I call it a mental issue. He would scream all night. And so the landlord's getting all these phone calls from the people that live below them. The police are being called to the house. All these things lasted like a year. So sometimes you do have to spend a little bit more time finding out a little bit more about that person. Background check is not going to tell you that, most likely. That was a really rough experience for the landlord because he basically every week was getting phone calls and why are the police at the house again, and all of these things. And I'm really trying to be nice to these people, but I want them out of here because I'm sick of the headache. So yeah, I've heard a whole bunch of weird stories.
Back to the kind of profitability side, I have a great story of a user, Landlord Studio user, who prior to using the software was using spreadsheets, and he built his portfolio up to I think it was about 20 units. He was still using an individual spreadsheet for every single property. And then he decided that he wanted to get a little bit more efficiency. So he came onto Landlord Studio, loaded in all the data, and ran a P&L report, a simple P&L report on his portfolio, and he realized that he was only making about $14 a month on one of the properties because he was completely oblivious of how much he was spending in outgoings because it wasn't up to date, and he was missing lots of expenses, and realized that he was almost in the red on one of his properties. And I was
Not a good situation.
yeah, and it just made me think like how some of these sort of bad accounting practices can impact the business. So I guess that's kind of a question for yourself. How can some of those bad accounting practices impact long-term success? What are some of the challenges that you've seen?
Normally, it's missed deductions or expenses that are not recorded. A lot of times it can also be just having a incorrect valuation on the property, that they've included land in the valuation, and so now that's not supposed to be part of the depreciation calculation, so separating that out for US taxes. Other times it's really about the not understanding the impact all of these, if you want to call them calls for, hey, this broke, that broke, the other thing broke, fix, fix, fix. And sometimes it is also just a matter of, hey, I've got 20 properties. I want a property manager to do this for me. But they're not really taking into account that what the property manager is charging you is leaving you with not much of a return at all. So really, what I find happens with landlords is they haven't done the actual work to know this is how I look today, and is that a good or bad thing? And if it's not so good, then I need to make some adjustments. How do I do that? Not knowing your expenses for a property is a totally bad thing. If it's a typical, hey, I've got a property and every month I know I'm approximately spending this for cleaning, or I'm spending this for the lawn to be mowed, and I'm spending this, you have a general idea of what it should look like every month. That's going to be on your reports. If you don't see that because you're not putting those expenses in, you're not recording what it is that's happening, you don't have the documentation, then what ends up happening is you don't have the data needed to make good choices, good decisions. Once you use a tool like Landlord Studio and you have the reporting that's needed, now all of a sudden you can see what's really going on at a property. You can figure out, is that property doing what you want it to do? Sometimes you could buy a property or have a property that everything's all brand new. If it's all brand new and you're getting top dollar for it, you should be making money, okay? But if you're not making money, what's going on? And that's what I'm saying. Typically, of course, most is not brand new properties. Most are used. Most are going to need some type of work. But in order for you to know that, you've got to be able to see it. And I think that's what's missing. They miss out on it. It's just a sad thing.
There's a really interesting trend that we see every single year, and it's right before tax season. We see this big scramble in users trying to get all their expenses and receipts and transactions together to hand over to their CPA. And it's quite funny because it happens every single year, and we call them the stragglers right at the end of or right at the start of tax season, sorry. And it just kind of goes into that whole point about, keeping track throughout the year and the benefits of doing that versus last minute scrambling, trying to get all your taxes together to figure out how much tax to pay. So I guess the question around that is, how can those kind of bad accounting and reporting practices during the year impact tax season? I guess, how does it impact you as a CPA and some of the bad examples you've seen with clients around that?
Actually, I'm an enrolled agent with the IRS. And so what that does for me is I get to see the fact that you didn't keep good records, and the IRS is so dependent upon record keeping that you run the risk of having a lot of your expenses, and literally I've seen the IRS say all of your expenses basically excluded. So that's number one. You don't have your records and they're not kept up, and now you're rebuilding this after the fact because the IRS, was doing an audit or a review or whatever you want to call it. There's many occasions they will just exclude it. So now you end up having a tax situation that you never want to have, which is 100% income is taxable. That's not a situation you want to have. Another thing that I notice is there is no way you can plan or save for the taxes. So now, oh my God, I have all this tax I have to pay, and when can I do that? I don't have that kind of cash sitting in the bank, blah, 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 that goes with that. So there's this scariness, and now you're rushing because you've got, oh well, how can I reduce this, and I've got to find this receipt and that receipt and pull this and pull that. Well, had you been doing this from the very beginning as you were going, then your accountant, your CPA, your bookkeeper, your enrolled agent, whomever you're working with, would be able to say to you, okay, based upon what we see, this is what you can expect as an estimated tax amount for your federal tax and for your state tax. And so now, based upon that, we can break it down into the quarterly estimated payment system that is already built in. That's what the IRS wants. So once you can do that, you can back into it and say, okay, you need to save X dollars every month. And what we do with our clients is we literally work with them on a cash flow system to help that happen. We have an account set up aside just for taxes, so that you can put that aside and make those payments, so that once the year begins and it's tax reporting time and we have to file your tax return, well, guess what? You've paid most of it, maybe even all of it, and now we're just truing it up, and you might get a refund, or you might have a very small balance that's due versus thousands of dollars that is need to be paid, and or penalties and interest for not prepaying your taxes, because that's the other issue. IRS is a pay-as-you-go system in the United States, the federal tax system, state tax system. That means if you first quarter, you better be paying them April 15th based upon that first quarter.
When it comes to managing finances, like separating bank accounts out, saving for taxes, etc., you've kind of mentioned a few things there. What's some of the biggest mistakes that you've seen? And you mentioned something about how your business helps with the cash flow sides of things. Maybe just talk a little bit more about that.
So a lot of times what happens is the business bank account, usually there's one business bank account. Sometimes I'll see people have two, but realistically, that one bank account does everything. And because it does everything, typically monies that should be allocated for certain tasks like taxes, okay, that should have a label on them saying, hey, don't touch this, this belongs to the government, is they get used. Why? Because the bank balance says X. Okay, so we have, if you've got all this money in the bank and $5,000 should be set aside for taxes, but you don't know that, so now let's buy this, let's pay that, let's take a big draw from the business, whatever that might be that's going to use up the funds that should have been allocated for your taxes. So one of the things we do is we help you identify what buckets or bank account titles should you have. Operating account, you might have an account that's totally just for your mortgage, an account for the taxes. When you put a label on it, now you've got responsibility for, oh, I have to pay this mortgage, I can't touch that money. I have to pay the taxes, I can't touch that money. So now you've got a better separation of your income. And yes, you still need an operating account. You still have normal fees. You got repairs, you got maintenance, snow removal, whatever it is that you've got on your property, insurance. However, there are those main things that can trip you up. Taxes is number one. Your mortgage would be number two. And, those kinds of things that are going to go, oh, this whole, this enterprise is going to die. Another thing that happens a lot of the time, because most people say, hey, I'm getting rent once a month, I don't really need to set aside an account to show me what came in the door. Okay. And that's okay. I work with clients where we do actually separate it out because they want to see that number. It's 10,000 this month. It's whatever this month, However, really getting a good grasp on 100% of your income is not yours. to use with whatever for whatever reason. So a lot of times, like I mentioned, that one bank account creates a false sense of this money is mine because it's my business. Well, no, not really. If you had 10,000 come in and you have 4,000 in expenses and then you have 2,000 in your mortgage, and those pieces need to be allocated so that you have a true picture of what that net number is. Now you know what that net number is that you can work with, and if your intention is to continue to build your portfolio, then you will come up with a good game plan to save some of that. Build a cash balance so that when you want to do the next project or the next rental property, you've got the means to do it. I know there's a lot of other creative financing strategies out there to help people, but in reality, you're going to need the cash. So even if that means I'm only paying for the closing costs, you need the cash. Pay the closing costs. So, anywho, those are the things that we do when we're working with a client. Let's help you systematically put that money aside so it's there to meet the goals that you have.
To kind of finish off, and one of my last questions is how important do you think software plays as a role in that, such as using Landlord Studio or any other software? From your experience, how important is it to implement a solution like that in your client's business?
It's actually, I would say, most important. And part of the reason I say it's so important is the results that you get to see right away. So that reporting information and the data that you need to move forward in your business, you can write it down all day. You can go pick up the checks or the cash from your tenants if that's what you want to do. However, none of that's very efficient, and it doesn't help you making good decisions moving forward. So, it's nice you got it in hand, but I know most people who receive cash put it in their wallet. When they put it in their wallet, it's not in their business. If it's not in their business, they can't make any decisions with it, right? It's just, hey, thanks, but wallet. Now I got it in my personal bank account and I can do whatever I want to with it. I find that having a platform like Landlord Studio that actually gives them the system that they need so that the tenants can actually pay them and it goes directly into your property's bank account. Having the ability to provide them with receipts, making sure that you're able to do all of your applications, making sure that you're able to get background checks all in one place makes your life a lot easier versus having a system of, I've got a paper form, now I've got to go to this system and type all this stuff in and do pull a report. Oh, I've got to go over here and do X, Y, or Z. Oh, wait, I need to go to the bank and no, let's simplify this, streamline this. And now you can have the data you need in real time or close to real time versus, oh, wait, I have to wait a month, 6 months, a year before I have my real numbers. And now opportunity may be gone for you to get in on another deal. You didn't save any money because you had no idea how much you should have saved. A lot of the things you just didn't do, even if it's just a new, hey, we've got, energy efficiency credits. What is that going to be? That's going away. When does that go away? Having those conversations where you could say, hey, I want to put solar panels in. I want to put this in. I don't know, a hot water heater system that's energy efficient, whatever that is. You can't have a conversation if you don't know your numbers. You don't know what kind of tax savings can I get for doing this. What makes sense? Do I spend all this money? Am I going to get the return on the investment in a year, in 5 years? What does that look like? I find that's a big, huge problem when all you do is wing it. And I call it winging it because writing it down on a piece of paper, putting it in a spreadsheet, you're winging it. You're doing the DIY way, and it's not giving you the data you need to grow your business.
Yeah, I love that. And I mean, that's why we're a big advocate for trying to change the business mindset of real estate investors and get them, tracking their numbers, doing their bookkeeping and accounting in one place, and making sure that they are on top of their numbers so that they can actually grow over time and build a more kind of profitable rental. Thanks heaps for joining us today, Christanne. Where can the audience find more about your business, and how can they get in touch with you? And if they'd like to reach out to you, how can they do so?
Well, I'm on LinkedIn as Christanne Wright, EA, or you can. My business is also on Your Right Resource on LinkedIn. That's our primary place. We do also have a website that is yourrightresource.nowsite.com, or you can just call us. We're happy to get a phone call, 814-250-1900. We love talking to people and really helping them solve their problems and loving solving cash flow issues. That to me is the lifeblood of their business. So we love working with them.
Well, that's it for episode 5 of the Profitable Rental Podcast by Landlord Studio. And absolute privilege to have Christanne today. And no doubt you'll be able to learn a bit about how to improve your rental property business through some of those tips and tricks. If you liked this episode, give it a share, give it a subscribe, and be tuned for the next episode. And you can follow us on social media as well, Landlord Studio on all handles, LinkedIn, Twitter, Facebook, Instagram, etc., where we share lots of tips and tricks throughout the real estate journey. And yeah, make sure you stay tuned for episode 6. That's going to be a good one. So until next time, have a great week. And thank you, Christanne.